Micron is the fourth biggest manufacturer of semiconductors in the world. And at the current time, they are around a 52-week low at the stock market. So let's see if this can be an interesting investment at the current price. First of all, let's look at the recent results of Micron. Well, as we can see, the revenue is up from $19.5 billion in June 2021 to $24 billion this year. So this is a really nice growth. Then if we look at the income, the story is even better, from $3 billion to over $7 billion. And if we take a look at the cash and cash equivalents, it went up from $7.7 billion to $9.1 billion. So it all seems really promising, but these are only quarterly results, and we should look in the long term. We should look at the results through the years. And even Micron acknowledges in their presentation that they will have some problems with customer demand and also some issues with inventory. So let's see, is this company doing really that well as it seems at the first glance, or is there a backstory? First of all, let's see who is investing in Micron. Insider buys, that's an X. Insiders are not buying. And what about super investors? That's a check. There are a number of investors that bought Micron. But if we look at the recent quarter, we can see that actually, if we add those shares that Seth Klarman and David Tupper sold, it's just a little bit more than what other investors bought. But what I am really interested in are those three names at the top: Mohnish Pabrai, Li Lu, and Spier. Because those investors bought Micron some time ago, and actually they did this together. Li Lu and Mohnish Pabrai, they worked on this as a team, analyzed the company, and Spier is a close friend of Mohnish, so they all bought it at the same, roughly at the same time, so maybe they know something more. But first of all, let's look at the fundamentals of this company. Return on invested capital. That's a check. For the last 10 years, the return was around 13.3% per year. And what about free cash flow growth? That's also a check. And it is a really, really nice growth of 20%. And what we are looking for is a growth over 10%. So this is double that. So it's really, really nice. What about shares buyback? That's an X. In the last 10 years, they issued 11.3% more shares. But recently, they actually started a repurchase program and they spent $981 million on buying back shares. So it's going in the right direction at the present time. Okay, what about dividend yield? That's a check. They just started to pay their first dividends and the current dividend yield is 0.9%. So we will have to see how it goes with the dividends. Is it just a short time experiment for the company, or will they keep it or maybe even increase it through the years? And what about the debt? Years to pay debt, that's an X. It would take them 2.8 years to pay their debt with their current free cash flow. And we know they have a lot of cash, but also they have a lot of spending to do every year. So I wouldn't worry about it too much, but it's not ideal. We would like it to be below 2 years. Right now, let's try to value the company by looking at the earnings, because they have great earnings. So let's see, the current PE, price to earnings ratio, is 6. And if we compare it to a 5-year average PE of this company, that's a check, because the 5-year average is 13.3. So if we look just at the earnings, it seems really cheap. But let's see the PEGI ratio, which is PE divided by revenue growth and dividend yield. That's a check, and the PEGI ratio right now is 0.46. And what we are looking for is any number that is lower than 1, because what it means is that the revenue growth and the dividend combined are worth more than the valuation by price to earnings ratio. And it's 0.46, so it's over 50% lower. So it seems like a great deal. But let's value the company with a discounted cash flow formula and see, will there be any differences, and if so, then why? Okay, so for that we will have to estimate the growth of this company for the first 5 years and then another 5 years, and we will make 3 scenarios, a low, a medium and a high one. So for the first 5 years in a low scenario, we can estimate a growth of 12%, and for another 5 years, another 12%. Then for a medium scenario, 15%, and 15% for another 5 years. And then in the high scenario, in which we believe that the company is going to do really, really well, we can estimate a growth of 18% and then 18%. So let's see the valuation with those estimates. So the intrinsic value is somewhere between $52 and $83. But of course, this is not the price we should be looking for. We always have to add a margin of safety. I use a 30% one, and this allows us to make mistakes in our estimates. Because even if we're wrong, we have this margin of error. If we made a mistake, we can still make this investment work, or at least not lose as much money as we would by investing with just the intrinsic value. So with the margin of safety, the price we should be looking for is somewhere between $36 and $58. And the current price is $52. So the PE valuation looked really, really well, but the discounted cash flow not necessarily so. Why? Because Micron has a lot of capital expenditure. They will spend over $12 billion this year on capex. So basically, it costs a lot to be competitive in this business. That is why the cash flow is lower compared to the earnings. And then we have to ask ourselves, what should we concentrate on? The earnings or maybe the cash flows? Well, like I said at the beginning, there are 3 very interesting investors that bought Micron. So we can look at the estimated price that they paid for Micron. And if we look at Li Lu's average, it is around $48. So really close to our medium scenario. If we look at Guy Spier's investment, it is around $60. So we are close to the high scenario. And Mohnish Pabrai added to his investment in the end of 2021, and his average went up from around $50 to almost $70. And even if those estimates are not exactly correct, we know that we are close to this window that they decided to buy in. So that's it for today. I would really appreciate if you would like the video. It helps the channel a lot. And if you want to see more videos like this, please subscribe to the channel. Okay, so see you in the next one. Bye bye.